All right, in this episode, I will share my history with money and my current thoughts on investing and wealth management. As a kid, I like to save money. I remember saving all the money I got in a little purple dinosaur bank. And when I finally got around to spending my money, the first thing I bought was another piggy bank so I can store more money. I did not know anything about investing, and I was not taught anything about finance or money management. I had minimum wage jobs in high school. I had to pay for my own college education. I ended up taking out a $7,000 loan to pay for my first semester of college. And I received a letter saying that if I make the minimum payments, I will have paid back $49,000. That's 7 times the amount of money I borrowed. I thought that was absolutely ridiculous. So this was kind of like a come to Jesus moment for me. From then on, it became my mission to get out of debt as quickly as possible. So I decided to join the Army ROTC in college so that I could get 2 years of free tuition. I also landed a chemical engineering internship with ExxonMobil where I took every other semester off and I worked for ExxonMobil while I was still a student. And then after college, I landed another chemical engineering job, and I was able to pay off all of my debt, including my student loans, within 6 months after graduating. So after getting out of debt, I saved up an emergency fund of about $10,000. I quit my job, and I joined a monastery. And as a monk, I didn't care about making money, and I didn't know anything about money management. I was so ill-informed about finance that I just kept that $10,000 emergency fund in the bank for several years while living in the ashram. I was into the idea of simple living and high thinking, and I had no other conception of what to do with money other than put it in a bank. Well, eventually I got married and I left the monastery. That transition from monk life to married life was pretty difficult for me. I had difficulty finding an engineering job due to there being a large gap in my resume. I also did not know how the real world functioned or how to get a job because I was living a secluded monastic life for several years. And when I did apply for jobs, I ended up being the target of an elaborate scam, which resulted in me having to file bankruptcy. So there I was, newly married, jobless, and bankrupt. I felt pretty awful. I felt like I could not take care of my family. I felt useless. So this is definitely a clear transition point in my life. My mind shifted from spiritual life being priority number 1 to making money being priority number 1. So I paused my spiritual practice to focus on my career and getting situated materially. I got all kinds of certifications. I ended up landing a job as a project manager. I researched how to gain wealth. I got into the FIRE movement, which stands for Financial Independence, Retire Early. And, I consumed a lot of Mr. Money Mustache material. I got into crypto, stocks, real estate, precious metals, and I've been building my knowledge and skills ever since. In fact, I was so determined to make money that I made a goal that I would become a millionaire in 7 years. I'm currently on track to meet this goal. I have until June of 2023 to meet this goal. We'll see if I actually make it or not. If I am successful, I joked about writing a book, Bankrupt to Millionaire in 7 years. Just kidding. I definitely would not do that. I can't stand crap like that. I find people who get rich by teaching other people how to get rich are some of the most annoying people out there. Anyway, back to my history with money. The first investment I made was, in retrospect, a dumb one. I put almost all of my investment money into a private company called Jump Pedal in 2015. I was able to do this because I knew people who knew the founder of the company, and I was able to have a phone call with the founder of the company, and he agreed to sell me some shares of his personal stock. The founder made some pretty amazing claims about the technology he developed, and I liked his vision of the future of the company. So the company is still operating today, but the progress of independently validating this technology and getting their product to market is going slower than I was expecting. I still have a dim hope that this company might actually amount to something, but I have pretty much just written off this investment as a loss in my mind. In 2016, I started learning about crypto. I bought my first Bitcoin around $500. In fact, there was a technical error when I made this purchase, and Coinbase gave me a free Bitcoin for the inconvenience. So I hopped on the crypto train through 2017, buying all kinds of different crypto assets, and the ride was great until, of course, the crash that happened at the beginning of 2018. So, the value of my crypto holdings plummeted, and I ended up selling everything after the crash. Luckily, I had set a stop loss, and I was able to sell all of my crypto with a small profit, but it still was not fun. So that was a great learning experience for me. After the great crypto crash of early 2018, I thought crypto was indeed a bubble, and I started to look into more traditional assets. I looked into real estate, but I quickly concluded that you probably already need to have a lot of money before investing in real estate really makes sense. So next I looked into precious metals. I started hearing from various gold bugs, and I started to worry about hyperinflation, the devaluation of the dollar, the Fed's ability to control the economy, etc., etc. So therefore, I started buying physical gold and silver coins. Next, my friend connected me with a nonprofit organization that offered me about 12 to 15% interest if I provided them a real estate loan. So I don't think I would make this investment again, but luckily it worked out as expected. Next, I looked into stocks and made a few investments. So there were some okay returns on these investments, but nothing really that significant. So this brings me up to early 2020. After COVID hit and the government started printing trillions of dollars, I knew I had to get out of the dollar. I started hearing from Raoul Pal from Real Vision around this time, and he was getting into crypto. He convinced me that crypto had the best risk-reward ratio and that crypto was getting the attention of really big, smart investors. He lit the crypto fire underneath me again, and I hopped back on the crypto train, so to speak. I learned that crypto was not a bubble after all. I mean, bubbles don't reflate after they pop. It was actually just a crypto bear market. And during that bear market, people were making significant progress building the crypto infrastructure. I started hearing from all kinds of amazing people in the crypto world. Michael Saylor, Jeff Booth, and so many others. In fact, I became convinced that Bitcoin is the best form of money to date. It best satisfies all the critical properties of money: divisibility, durability, recognizability, portability, and scarcity. So I bought Bitcoin again around $6,000 in March of 2020, and I also bought a handful of other coins. So it's turned out to be a great investment, and I've been buying crypto ever since. So in early 2021, I sold all of my gold and silver. For a while, I thought it would be good to have both precious metals and Bitcoin in my portfolio, but after learning more about Bitcoin and how it pretty much just makes precious metals obsolete as a monetary instrument, I ditched my precious metals and I bought Bitcoin and some other crypto assets with that money. So selling gold and silver was a real pain. I had to physically pack the coins in a very specific way, bring the heavy boxes to UPS, and pay for shipping. The gold and silver ended up getting lost in the mail, and I had to file a claim with UPS to get reimbursed, which took a long time. So it was a very nerve-wracking and cumbersome process. This process of selling my gold and silver was just further proof why Bitcoin is superior to gold and silver as a monetary asset. So in early 2021, I also started an investment advisor firm so that I could become an accredited investor. So the SEC has this extremely lame rule that only people who have over $1 million in investable assets or who have made over $200,000 for 2 consecutive years qualify as an accredited investor. So being an accredited investor allows you to have access to certain investment opportunities that non-accredited investors don't have access to. So for example, you can have more opportunities to invest in private companies before they go public. The semi-good news is that in late 2020, the SEC changed their rules so that people who hold certain professional certifications can also have accredited investor status. So I thought this rule was long overdue, and I started studying for my Series 65 test as soon as I heard about this rule change. So when my investment advisor firm was approved, I started angel investing almost immediately. So my first 3 angel investments were Boxable, Aptera, and Celsius Network. So that about sums up my history with money and investing. Now I'm going to share my current thoughts on wealth management. So for people who struggle with their finances, who find themselves with unmanageable debt, and who are not disciplined with money, I would recommend that they check out Dave Ramsey. He offers solid advice, and I think his 7 baby steps can help a lot of people. And for people who are perhaps more responsible with their finances, and they're just looking for, a tried and true traditional way of gaining wealth, I would recommend the Money Guy Show on YouTube. I think their advice, if followed, will leave one more wealthy than if they follow Dave Ramsey's advice. Their advice does require a certain level of maturity and personal responsibility, though. For people who are young or who happen to be in a situation in which they can stomach high volatility, I fall in this category. I would recommend following Alex Mashinsky's Mashinsky method. Another good one is Simon Dixon's Plan B program. Both are very good. So I'll post links in the show notes for these programs. In general, I resonate with the idea that you should only invest in what you know. I also believe that a buy and hold strategy is the best for most people. So if you decide to day trade, you are up against the most sophisticated investors who have way more knowledge and tools than you do. So I only buy things that I would hold for at least 5 to 10 years. You should always ask yourself, if you liquidated all of your assets and you had all the cash on the table in front of you, would you buy the same investments that you have now? Or would you buy something different? So every day that you hold onto an investment, you are essentially choosing to buy that asset again. I think the Austrian economists are right. And I think that the current financial system is not sustainable. I agree with Robert Breedlove when he said that artificial central bank induced inflation is a corrosive moral cancer on society. Technology is a deflationary force. Everything should be getting cheaper over time, not more expensive. It is a tragedy that the purchasing power of people's money that they worked so hard to get is being stolen from them. I agree with Ray Dalio that we are at the end of a major debt cycle. I believe that the Fed is trapped. Interest rates are at 0, and if they try to raise them, as they've tried to do in the past, the market's going to crash. I think there has to be some kind of monetary reset in the near future. Therefore, I believe everyone should be prepared for a new monetary system. I believe the best way to prepare for a new monetary system is to have assets that are completely outside of the current monetary system. So I think the best asset like this is Bitcoin. Physical gold and silver are others, but I personally don't think they're as good as Bitcoin. I would recommend at least some percentage of your portfolio in Bitcoin. Some other crypto assets may be a good investment, but most of them are going to fail. So I look at other crypto assets more like investing in startups. There's more risk, but there's also potentially more reward. So if you have crypto assets, I would put at least some of it in the Celsius Network wallet so that you can earn yield on your crypto. Celsius Network is way better than its competitors. BlockFi, Crypto.com, Nexo. I've looked into all of them and they're not nearly as good. Celsius Network offers the best interest rates. They have a great CEO. It's the most transparent, has the best people, the best track record, most experience, best security, most compliance, and they have a very exciting roadmap. Celsius Network also offers the best loans. So if you need cash, but you don't want to sell your crypto, you can borrow against your crypto at the lowest interest rates. So in the US, you can get a loan for as low as 1% interest. And in some places, they offer 0% loans. So it's a really, really good deal. So this is how the rich get rich. They don't sell their assets when they buy stuff. They borrow against their assets, which is not a taxable event. And this is how the rich avoid paying taxes. So if you want to check out Celsius Network, you can use my referral link in the show notes. You can get $50 in Bitcoin for signing up. If you are already wealthy and you already have a lot of money to invest, I think real estate's good. I plan to convert a good chunk of my crypto assets into real estate when my crypto assets reach my price targets, or until I've held the crypto assets for at least 5 years. It is possible that I may decide never to sell some of my crypto assets and simply borrow against them to make real estate purchases. For stocks, I admit that I am not the greatest at picking stocks. Most of my investments into the stock market are just ETFs. I might pick a specific stock if I'm particularly excited about a company's products or their vision for the future, but most of the time I just stick with ETFs or index funds or something like that. And I also avoid buying on margin. Buying bonds now at such low interest rates is just a terrible investment. It makes no sense to buy them now. I believe gold is obsolete as a monetary instrument. Since most of the value in gold is from its monetary use, I would not hold gold in my portfolio right now. I do not invest in commodities. My last bit of advice here is that if you have dependents, you should have term life insurance. The term life insurance should be enough so that it can replace your income if you die. All right, so now I'm going to share a breakdown of my net worth as of August 2021. I try to have around 6 months of living expenses in cash in my bank at all times as an emergency fund. Everything above that goes into either real estate, stocks, or ETFs, and crypto assets. My net worth roughly breaks down as about 15% equity in my house, 15% stocks and ETFs, and 70% crypto. It was roughly equally split between real estate, stocks, and crypto in early to mid 2020, but because crypto performed so well over the past year or so, the crypto part of my portfolio became a much larger portion. Of my crypto holdings, 35% is in Bitcoin, 26% is in ETH, 19% is in Cell token, 16% is in HBAR, and 3% is in Link. Apart from my retirement accounts, I do own some stocks and ETFs. So I own the Vanguard S&P 500 ETF, the ARK-K ETF, the ARK-G ETF, the LIT, L-I-T ETF, and I also own Tesla and Apple. For private stocks, I own Jump Pedal, Aptera, Boxable, and Celsius Network. I'm holding most of my crypto assets in my Celsius Network wallet, and the rest of my crypto assets I hold in private wallets. I buy Bitcoin with the Strike app. I buy HBAR through Binance.us, and I buy ETH and Link through the Celsius Network app, and I buy Cell token through Uniswap. And then I just have my public stocks and ETFs with traditional brokers like TD Ameritrade, and I have my retirement accounts with Fidelity. And then my private stocks are in book entity form. So that's all I have for this episode. Thanks for listening. Take care.